I think we'll make a start, folks, if that's okay with everybody. As current chair, I'd like to start the meeting by welcoming everyone to this meeting of the Audit and Accounts Committee meeting on the 30th of May 2024 at Newshire Hall, and to those who are watching live stream on YouTube. You'll recall that County Council allows filming and photography at its public meetings, so please feel free to take pictures and use social media during the meeting. Can I ask, though, that everyone present turns their mobile phones to silent or vibrate whilst the meeting is taking place? Please be aware that this meeting is being live streamed and that a recording of the meeting will be available to view on the County Council's website. There's no fire alarm test scheduled for today, so if the alarm sounds, please leave by the nearest available marked exit, which is the door on the left-hand side, and assemble in the car park. I think we'll just quickly go round the table, partly because Emma Larkham from KPMG isn't yet with us, neither is Michael. We have online Mohammed Hussein, independent member. Hello, Mohammed. And Emma Duncan, Director of Governance, who is also there. Hello, Emma. So we're just going to quickly go around the table, just so that everybody is aware. Mark, do you want to start?
Mark Hodgson, Audit Partner, Ernst & Young.
And on, Jeff Steve, St Neots, Eatons.
Alison Whelan, Ely North.
Mairead Claydon, Head of Internal Audit and Risk Management.
Shafali Wadhwa, Deputy Head of Internal Audit.
I'm Graham Wilson, as you know.
And I'm Nick Gay, representing Market Ward in Central Cambridge.
Stephen Moyer, Chief Executive.
Dawn Cave, Democratic Services Officer.
Alan Sharp, representing the Wood Ditton Division.
David Embrose-Smith, Councillor.
Chris Bowden, Member of the Committee.
And Tom Kelly, Service Director for Finance and Procurement.
Mohammed, do you want to just quickly introduce yourself as well?
Yeah, sure. Yeah, Mohammed Hussein, and I'm one of the co-opted independent representatives for this audit committee. We've been in the role roughly for about 7-8 months, so yeah, still in the first year of providing some support.
Thank you. I think you are the independent member
rather
than one of the independent members, but you are the. And Emma, do you want to briefly introduce yourself?
Thank you, Chair. Emma Duncan, Service Director, Legal and Governance.
Thank you very much. So that's the whole gang, and normally we would expect Michael to be here as well. Dawn, the first item is for you about notification of appointment of chair and vice chair.
Thank you, Chair. Just to confirm that at the full council meeting on 21st of May, Councillor Wilson was appointed as chair and Councillor Gay was appointed as vice chair for the municipal year 2024-25.
Okay. So we move on to apologies and declarations of interest. Dawn, do we have any apologies?
No apologies, Chair.
Thank you. And does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest?
Given that we have a couple of audit firms, I think I ought to declare that I'm a member of the Conduct Committee of the Institute of Chartered Accountants in England and Wales.
Okay, thank you very much. We move on to the minutes of the committee meeting held on 28th of March 2024 and the action log. Members, we're being asked to approve the minutes of the last meeting as an accurate record. If any committee member wants to raise a question on the accuracy of the minutes only, can they do so now? I see no objections, so we'll take the actions, look, the minutes as carried unanimously. So we now move on to the action log. And are there any comments or questions on the action log? Stephen.
Chair, thank you. Just in relation to item 159 on the action log, which is on page 14 of your pack, just to confirm that the Service Director Human Resources has now made some adjustments to the Council's disciplinary policy, and we are in the process of consulting the trade unions on those. So that would enable us, subject to agreement being reached, to continue with disciplinary investigations and hearings, even where people have left our employment, if there is a genuine public interest requirement for us to do so. So that's work that's well advanced. I hope to be able to confirm it's closed and complete by the time the committee next meets. Thank you.
Excellent. Thank you. Jeff.
Was in relation to the letter from Val Thomas, and I don't know whether I should be introducing it that or talking about it at this stage. It's to do with the action log. Is that separate?
We can cover it now, or we can.
Well, it's only a matter of clarification.
Go on then.
I'm just going to find the reference to it. Paragraph 5.1. As a result of this saving, a saving was agreed of £20 million per quarter.
So that Chris pointed out to me yesterday, and is incorrect, and it is £20,000.
I got rather excited actually. I thought, wow,
but well done.
Something
You
in the
get
kitty
an
there.
extra brownie point, as Chris does, for spotting that what I regard as a typo. Chris.
Yes, thank you. On that subject, since it's now been raised by Councillor Seif, I thought the letter that we had from Val Thomas was exceptionally helpful. It would have been even more helpful if it really had been £20 million a quarter saving, but even so, it was still an exceptionally helpful and positive statement that we had. I have had criticism in the past that I was not happy with the way in which officers have been dealing with this whole issue. I'm very happy with the way in which Val Thomas has picked it up and taken it forwards. I do note, however, that the deadline submitted in that letter is yet a further month behind the previous deadline we've had. I'm still very positive about everything, but I would want to make sure that that deadline, the new deadline, which I think was 31st of July, is actually adhered to. And I think that we should make a note of that to make sure that at our next meeting, that 31st of July date has been met. But overall, the very fact that Val told us that £92,000 worth of savings had been identified as a result of the open book accounting, together with a possible additional 50,000, which is uncertain at the moment, it just goes to show the value of open book accounting for certain types of transaction and certain types of contract. And I think that all of our eyes should be opened by that. And I'm not suggesting for 1 second that every single contract that the council enters into should be on an open book basis, but I think the management team should take a note of that, and certain types of contract should in future be open book contract, open book accounting, where we can see that there's a potential advantage to be had.
I agree entirely. Stephen.
Chair, absolutely in agreement with you and Councillor Bowden. I think there's quite a lot of opportunity and learning here for broader contracts within the council, so that's something the corporate leadership team will take away. I'm very conscious Michael's opined on this matter previously as Section 151 officer, so we'll make sure we're taking into account his professional advice, but I agree there are some definite benefits to this approach. In terms of the due date and the revised due date that committee have been advised about in the briefing note from the Acting Director of Public Health, just to confirm that with the changes we've made, Public Health now sits within our Adults Health and Commissioning Directorate. So the Executive Director of Adults Health and Commissioning and I have had a conversation about impressing upon Public Health the need to meet those deadlines. So I would expect you to have, subject to Mairead's formal advice, conclusion by the time the committee meets, or certainly by 1st of July, as stated in the report. Thank you.
Thank you. And I'll come to Mohammed in a moment, but I was also reassured by an exchange of emails between Val and Mairead about the evidence required to demonstrate that open book accounting is being undertaken correctly. And once that evidence is provided, then Mairead will be able to sign it off as complete. Mohammed, you want to, was it related to that or a different
No,
item?
it's a separate action point. It was 159 around the deep dive on some essential and high risk actions to be brought to the committee in the future, where relevant, really. It looks like the action's been closed with another action almost to build it into the annual governance statement, but I'm not quite sure how that's going to be built in and how that's going to address the actual underlying thing that was raised, essentially, just trying to get some clarity on that.
Stephen.
Thank you, Chair, and thank you for the question. On this particular item, I had a discussion within the statutory officers group. So that's myself, Michael as our Section 151 officer, and Emma as our monitoring officer around how best we could facilitate this. Making myself intensely popular with all of my executive directors, they will now be required to attend the Audit and Accounts Committee during the course of the year to provide update on their director assurance statements and progress with their internal audit actions, particularly on those matters that are rated essential or high, but that should allow members to scrutinise more fully the progress within each of the 5 directorates of the Council. It's a model I've used elsewhere, Chair, so we've built it into the annual governance statement action plan, and I think that will enable members to go further and deeper into those particular actions. Thank you.
Mohammed, does that
Yeah,
answer your question?
Yeah, that's useful. I guess my only point on that would be if it's going to be sort of on like a risk basis, because I'm just concerned we don't want to have every type of action and issue almost come in here. So almost the ones that are, overdue of significant concern, so that lens will be applied, hopefully, to that.
Yep, there's a lot of nodding going on, so that's absolutely right. Okay, thank you. Chris.
Thank you, Chair. May I thank the Chief Executive for the actions he's taken on this and the direction of travel that we've got. But I would encourage him to go back to the individuals concerned and tell them they've got nothing to fear from the Audit and Accounts Committee. We're here to help. We're here to scrutinise. We're here to help. And I trust that we'll be here to congratulate them on just how well they are doing. But we are here to scrutinise that, and I'm sure they'll be aware of that. But we're not here just to try and find fault. We're not here to nitpick. But if there are major issues, we will highlight them.
Indeed. Okay. Any other comments on the action log? Otherwise, we note all the updates that have been provided. There was one I was expecting you to raise, Jeff, either here or later, about Section 106 payments and work.
Oh, thank you for introducing that one. I note that on item 169, we're going to get a report in July. It was sooner than July, but if it can't be, then it can't be. But there is, of course, one particular Section 106 issue. I don't know whether we should be discussing it in open meeting, where we are chasing a couple of million quid at any rate from a developer. And I just wonder if we can have an update of that from the Section 151 officer.
Do you want to do that privately?
Is
that
not covered under the agenda? So.
No. Okay. So we'll look forward to seeing the report in July.
Confidential section.
We'll have a chat with Michael separately on the other issue. All right. Thank you very much. So we've noted all the actions and the updates in the action log. We move on to item 4, which is petitions and public questions. We've received no petitions or public questions, so we move on to item 5, financial reporting and value for money report. Can I ask Tom Kelly, Service Director, Finance and Procurement, to introduce this report, please?
Thank you, Chair. So to take the committee to page 17 of the agenda pack, and the committee will recall we reported at the last meeting that we'd received completion certificates for the years ending 2017 and 2018 from BDO, our then auditor. I'm pleased to say, I think it's fair to say there's been a flurry of further progress in April, and we now have 4 further years closed. So for 2019, 2020 and 2021, it was the value for money aspects which were outstanding. And for 2022, both the value for money and financial statements. So on those 21-22 financial statements, the the audit there concluded as previously expected. The committee has already received the adjusted and unadjusted differences from that year, and Chair, you signed those accounts under the delegation the committee previously provided. On the value for money aspects then, so in the more historic years, we see modifications in the auditor's opinion for 2019 and 2020. That follows modifications in BDO's equivalent opinion. These will be issues that are probably familiar to the committee, so procurement arrangements and kind of tracing back our particular procurement arrangements in individual contracts. And EY in their work looking at those years particularly draw attention to the council's record keeping of that time, which is limited the assurance that can be provided. And the Manor Farm tenancy issue also referred to as clearly a high profile governance matter for the council at that time. It's pleasing to report in the more recent years for 2021 and 2022, those modifications in the opinion have receded, and under the headings that we report in you'll see on page 19, so financial sustainability, governance and improving value for money, the comment that the council had proper arrangements in place under each of those headings in those years, and the committee can take some assurance, I think, from that position, and clearly an important milestone for us to reach that pleasing position. So then section 2.2 of the report looks on to 2022-23. We have attached as an appendix to this item the interim report for that year on value for money, and Mark may want to comment on that further in a moment. In terms of the financial statements, we say in the report we're expecting a disclaimed opinion for that year, and we've talked previously in the committee about the kind of longer term tail effect of that on future opinions, which is important to keep in mind. I think the complication we didn't know about when the report was drafted was around the general election and the impact that's had on secondary legislation. So as far as I'm aware, the legislation that would enable the disclaimer on the financial statements hasn't come forward. So that is an additional uncertainty. And there's brief reference also to objections which are being considered in 2022-23. And that's also progressed a further step with EY deciding or providing some further steer on which parts are eligible for further consideration within those objections. And then 2.3 then looks ahead to 23-24. As I say, the backdrop is that uncertainty about the disclaimer for 22-23. The draft accounts are due for publication for tomorrow, and we are, I think it's fair to say at this stage, pretty confident just looking at final versions, but on course for publication tomorrow, which I think is some 6 or 7 weeks earlier than the equivalent point last year. And I'd just finish by saying that's been a kind of tremendous effort by colleagues across the council, and in particular some of my colleagues in the finance team in the last few days and weeks in particular. So thanking them in particular for the efforts they've gone to get to that position, and hopefully we will be publishing on time in accordance with the regulations tomorrow. So that's the introduction to this report.
Thank you very much. And before I open it up to questions, can I just repeat that your congratulations to the team, both for getting the accounts published, assuming that they are all published tomorrow, but also what appears to be extremely good reports from EY and others about the work that has been done. When we get to Mark's report, I shall look him in the eye and say, the council is in a sustainable position going forward, isn't it? And he will nod sagely and give us that indication, reassurance that we're not one of the many councils who are indicating they're going to go bust. And welcome, Emma. I'm sorry that you got caught up on the M11, but you have made it. And as you heard, we've done, well, we have done some of the earlier bits about minutes and action logs and things, and Tom has just introduced his paper, so we'll take questions on that and then invite Mark to present his report before we get to you, if that's okay. So comments, questions, Nick?
Yeah, just on this question of the disclaiming, this is now going into the public domain, and I think there's a serious danger of it being misunderstood, misrepresented. So I wonder if whether we should do some proactive comms to explain exactly what it means and make it very clear that it's as a result of the problems in the local government audit sector and not something that's a consequence of misgovernance by the county council. Or we could, of course, do it reactively as well, but just thought to raise that.
Can we get some other comments and then come back to what we might do about comms or not?
Yeah.
So, any other comments, Jeff?
Thank you, Chair. Slightly different aspect of this, and it may be that I'm getting hung up on nomenclature, and you will tell me if I am. But I just wonder whether there's any inconsistency with a statement or the auditor's statement in this report and what I know perhaps I shouldn't do this, I'm relating this to the internal audit report. The auditors say they are satisfied that we have good systems of management of risk and that everything is, we're able to manage our affairs very well. And I hope that certainly is the case. But the internal audit report tells us we have moderate assurance. So I just wonder whether there is an inconsistency, or indeed perhaps to ask the auditor whether there is any inconsistency in terms of, I mean, that's moderate assurance on internal control, which is a very important part of governance, of course, but is only one part of it. So I'm just wondering how it's not criticism, but just to understand how we reconcile those two factors.
Chris, are you going to answer that, or yeah? So, well, God, ask your question as well. Then
I was just going to add to the questions again to do with the disclaimer. I take it first of all that we still haven't heard from any relevant body what the exact form that this disclaimer will be. So if the wording is now known, then I think I'd be interested to hear that was just a straightforward disclaimer of opinion. Given that there is a disclaimer of opinion, I wonder if we could expand on the situation to do with objections to the accounts and whether a disclaimer of opinion will reduce the amount of time which may be taken in considering those objections, given that we are going to end up with a disclaimer on the accounts anyway.
Okay, so I'll invite Michael to address these elements about disclaiming, and also the point that Tom made about when we like to hear whether the regulations have been changed or not, and if so, what they're going to say.
Thank you, Chair. Just to reiterate the point, it didn't make the parliamentary legislation before dissolution last night, so we will now need to wait in terms of that next parliament, in terms of then that being enacted. I have no correspondence or no understanding officially from government on this matter. I do on certain other matters from that, but this is one that still remains to be addressed unless our auditors are able to answer any further. So my suspicion is that the 30th of September will be very difficult to hit with the legislative and then the work that needs to happen alongside that. I am aware that firms are working with the FRC. We've also had NAO guidance as well as SIPFA guidance that's helping move the process along in terms of both the disclaimer but also the open balances review. And I think that's still pinging back and forward. The original intention was something for the middle of next month, but I don't think that date will be hit at this stage. So that will cause an issue in terms of that. In terms of the actual disclaimer itself, no, we haven't seen any wordings. Clearly, the firms will each have their own view, and I know that's going through. And that then does lead on to the communications matter, because I think this is both a national but also a local issue. For example, I was talking to one Section 151 officer yesterday where their authority has not produced the accounts since over 3 years ago. Now, in that instance, the disclaimer will be legitimate, and that will therefore be probably more obvious in terms of why that is. For those, and Cambridgeshire is within this group, where accounts have been produced and are available for audit, but the auditors have taken the decision to catch up on the backlog and clear up to 22-23, then that will require a different form of wording, and typically a disclaimer is due to the auditor not having the level of information to form an opinion. We would argue that we have the level of information available, so that will be quite interesting to see that wording and what that says. And I think from that's where we will then look at the position on our societies, our national position with SIPFA, LGA on communications. I know that we will then probably in a lump, it's certainly in excess of 250. Although the latest figures, I think we're also getting 13th of June as to what the current position is of outstanding audits. But I expect we'll be one of about circa 250 plus councils that will be getting a very similar form of wording, read the disclaimer. So I think the communication will follow as and when we get more information, but clearly the awareness through this committee and picking up on the points that the accounts were available. They were published after the 31st of May's deadline last year. I can give members assurance I have reviewed a draft set of accounts in readiness for publication tomorrow. So I'm very, very confident that we will publish the accounts by this year's deadline. But we didn't last year, but the working papers were available, but there were a number of issues related to previous years. Clearly, some of those were driven and resultant from prior year objections. It is good news that those have now been resolved. And I am aware that our auditors for 22-23 EY have written on the objections or questions arising from the 22-23 public inspection, and therefore already taken some views in relation to that, regardless of the disclaimer, because that was an issue for me, and that's probably a point at which to pause and ask our external auditors if they have anything further they wish to say on this matter, including the Councillor Bowden's point.
Okay, Mark, over to you. And you might take this opportunity just to introduce later your report that you've submitted as well.
Sure, no problem. Thank you. So in answer to a couple of the questions, I think each firm is working on the opinion wording that would accompany a disclaimed form of wording, but each firm is equally keen that the FRC provides some level of oversight, as it would be a consistent approach across the sector, given it is potentially driven by a ministerial or statutory direction. So we are looking for that guidance currently. So there is no form of wording common in place currently. Concur with everything that Michael has said. We're not aware of any further guidance, but have opened avenues of communication with DLUC and the FRC to see what is currently happening in lieu of the general election, but have no further information and therefore can't comment further on the direction of travel for that. We were aware that if the legislation was passed, the shadow system leader would be issuing guidance to all chief executives, Section 151 officers and chairs of audit committees about what that ministerial direction legislation meant, which would lead into how communications could be made by a council in receipt of a disclaimed audit opinion. So there is that wraparound guidance in train for that. So I think that covers most of the questions. There is a discrepancy in terminology that external auditors use and internal auditors use in describing assurance levels prescribed by different professional bodies. Adequate assurance from an external audit perspective is based on our understanding of what internal audit have done and their heads of internal audit opinion. There is no direct correlation between adequate and moderate, but there is definitely a kinetic link between the two, which I think you could read. We only get excited about limited assurance from internal audit and that impact on us. So I would take moderate as in line with ours currently. And then in terms of our reports, I think Tom's done a very good job of summarising how April was for me, which is pretty busy, and it's really good to move through 4 financial years for you. I would say our qualifications of 2018-19 and 19-20 around procurement and manor farms, whilst well known to you, because of delays from previous value for money opinions, the council was unable to put in place appropriate responses to that and therefore couldn't have actioned the recommendations that were preceding our tenure, and therefore the qualifications were kind of de facto. But it's really good to see the progress made, especially around procurement going into 2021, and our ability to lift that, and therefore comment in our commentary going forward that procurement arrangements are now appropriate to the set of circumstances. And then the report that's in your papers is our interim value for money commentary for 22-23 to bring you right up to date. The appendix to that sets out the baseline arrangements the council has, and that's the bit that gets updated every year, but keeps you grounded in what are your core underlying arrangements. I think that's really important. So that goes back across all 3 years we're reporting in this format. And then we've given some commentary about what's happened to the in-year position. And our conclusion on financial sustainability is that there are adequate arrangements in place, which when you link it to the latest going concern conclusion on the 21-22 audit opinion, gives you the assurance, I think, Graham, that you were seeking when you asked your question at the beginning. We are therefore now just beholden to seeing what happens in the ministerial position and legislation in respect of 22-23, and then we will close out as soon as we are able to, once guidance has been issued by the FRC or the shadow system leader, and leave you for 23-24's audit with KPMG colleagues.
Okay, thank you very much. Any comments to that? I think that's very reassuring. Chris?
Just 1 or 2. But the first thing is I just would like confirmation of the position as far as the objections were concerned to the 22-23 audit.
Mark, do you just clarify the things that Michael's described?
So Michael described the position perfectly, that irrespective of whether there is a disclaimed audit opinion or not, objections have to be determined, concluded in accordance with National Audit Office guidance in full prior to that disclaimed opinion being, well, prior to the audit certificate to that year being concluded.
Go on.
I just feel, continuing from Councillor Gay's comment earlier, it will be really important for us to distinguish between a disclaimer of opinion and an adverse opinion. And I know that's a fairly technical matter in audit terms, but it's one I think that we're going to have to raise to contrast what a disclaimer is from an adverse opinion. 2 very, very different things indeed. And I think that if we are considering being proactive in what we put out, then that should be part of what it is that we say.
Okay, so we'll come back to that. Jeff, you've got another point you wanted to
Well,
raise.
I just want to respond, if I can, to Mark's response to my question, which is that, and I don't want this to become an academic debate, which it obviously could be. Clearly, well, as you know, I'm an accountant who's had great difficulty really understanding what audit opinions mean. And they mean what readers sometimes want them to mean. I do I mean, this is a question to all of us in terms of the internal audit. What is good enough? What would constitute satisfactory? Where does the line come? I think that I want to discuss or raise a little bit later whether moderate assurance is something we should be satisfied with. I mean, it's obviously been occurring, and we're getting that assessment for many years, well, at least for 2 years. Should we be looking for higher, and should the auditors, well, not should the auditors will rely on their own work, of course. But the fact that internal audit is taking place is a factor that enters into their opinion. So I just wonder where the line becomes that you are not satisfied that the controls are in place and suitable governance is in place. But I accept from pragmatic point of view, you do what you do and you come to the conclusion you do, which is fair enough.
It's a really good question. I would say that as external auditors, you'll never get more than adequate assurance from us over value for money arrangements, because that is the bar at which it is set. And I think you're right in suggesting it's for this committee and indeed the council to work out what its risk appetite is in relation to the assurances you want over your own internal control systems, over which Mairead, head of internal audit, would opine. As I say, we are primarily interested in internal audit's limited assurance reports to the extent that they would impact on our responsibilities. So from financial reporting and indeed any governance related weaknesses that they identify, and that would be built into value for money work that we would do, such as we have reported on for Manor Farm tenancy, for example. So it is all interlinked, but totally accept that there is a separation, if you like, between the language that we use. And I think it's for this committee to work out where that level, or what the levels of assurance you're getting from the various parties are, and how you mitigate any gaps, should you think there are any.
Okay, thank you. All right. Let's go back then to whether or not we do any comms, and if so, when. I don't think we can, it's appropriate for us to do anything before the general election, but after the general election, it would be good to be able to put out something. I can't believe that there will be that amount of interest personally, but something which reassures people that we've had a very clean bill of health from our external auditors on previous years' accounts, and that the committee has congratulated the Stephen, Michael, Tom, and Emma and their teams for all the work that they have done producing the accounts, but that there is this issue about disclaimed accounts for this particular year and what it means, and that it clearly not, as Chris has said, it's not adverse opinions, it's a disclaimed opinion. Now, whether we will have the information by after the 4th of July from the FRC or government or whoever about the wording that we can appropriately use, I don't know. We may have to make something up. But how do others feel about putting something out into the public domain about comms? Chris?
I think, Chair, as you say, we'll have to wait until we get further guidance from relevant authorities, and I don't see that happening before the election. It may be sometime afterwards, but I would be perfectly willing for this to be given to you and the Vice Chair to have a look at, rather than necessarily having to come before this committee, because I think we all agree what it is that needs to be communicated, and we shouldn't necessarily delay. Once we do find out what's going to happen, we shouldn't delay just because there may not be another meeting of this committee for another 3 months.
Okay, others happy with that? I see a lot of nodding around the table. Okay, so Nick and I will take that away and we'll see what comes after the election. Mark?
So just to be explicit on something Tom had in his report, and as Councillor Whelan is here, the 21-22 audit opinion that we issued over the council's accounts also included the pension fund audit opinion and consistency report on the annual report. So the pension fund audit for that year is also done and complete.
And Alison, you're happy with the results of that audit?
Very much so. It's good to have all of this, and it would be nice if we weren't in the situation that we're generally in, which is causing all sorts of problems. It would be nice to have, to see that assurance for everyone. So thinking about the communications point, I think it really is important that there is an understanding of the public as to exactly what is going on. I suspect that, as is the case with audit generally, the public have very, very little idea of what auditors actually are doing. So something which perhaps expands upon that would be really, really helpful for the public to understand exactly what auditors are there for, what they are giving assurance about, which I'm afraid is a very, very different thing to what the public think they're giving assurance about.
Indeed. Okay, Jeff. Press your button. Can you press the button?
I'm saying sorry, Chair. Yeah, I'm the member on the pension fund board, and indeed I was going to raise this particular issue as well. So thank you for reminding me, but it's very important, and members will want that assurance and comment. Thank you.
All right, thank you very much. Just before we move on to Emma's report, could we just go back to BDO and how we're getting on with PSAA in agreeing the BDO fees? Everybody's smiling here. Michael, the Chief Executive's looking to you. Oh, Tom.
So at this stage, we've received some further information from BDO in terms of transparency around those fees. I think it's fair to say that it broadly makes sense in that we can trace back some of the history, but I think we've also heard quite clearly from the committee that there isn't a comfort there to support the submission of those fees to PSAA. So we're likely to be in the position, following this committee's previous steer, that BDO will go ahead and submit a fee request to PSAA, but that the council won't be in a position to support it, and then it will be for PSAA to make that final decision.
Okay, do you have everything that you need from us as a committee about our views on the work that BDO have done?
Yes, I think so. I think that's very clear in the committee's minutes, and as I say, we, as a result of the earlier steer, we have had further information back from BDO, but we're at the point now where we will need PSAA to determine it.
Just very quickly, Tom, have you got an estimate of actually how much it will be, or is likely to be?
I wouldn't like. I have somewhere in my emails, but I wouldn't like to say that in committee. I think it's broadly in line with the figures that we've suggested before, but I can circulate that to committee by email very promptly. So.
Okay, thank you very much. Mohammed, I can't see you, so I have no idea whether you're A, still there, B, got your hand up, but you're okay.
No questions for me now.
Okay, thank you very much. Excellent. We move on then, Emma, to your report, which is the External Audit Plan and Strategy for 2023-24. Tom, did you? Sorry. I beg your pardon, Dawn. Okay, right. We need to just confirm that we are noting the reports that Tom has produced and the audit results received from the auditor for 2018 to 22, and B, the report from the auditor in the appendix from EY, interim value for money arrangements report for the year ended 31st of March 2023. And amongst other things, we've agreed that we will put out some comms when the situation is a bit clearer. Everybody happy with that? Excellent. Thank you very much. Okay, so we are now moving on to the external audit plan and strategy for 2023-24. Tom, do you want to introduce it? No, Emma. I do you then.
Thank you. I think just this is our strategy document. It's the first time the committee's seen this. I think firstly, just to say this is still very much a draft document. So based on the work that we've performed to date, but we do have a number of procedures that we still need to do from a planning perspective, but we thought it was helpful for the committee to have early sight of where we were thinking we would land on risks. We will bring this back at a later committee in its final stage once we've completed that work. So just to bear that in mind as we go through, that these are still draft risk points. So if I just take you through a couple of the key pages. So on page 3 of my document, we set out the materiality as we see it. This is based on the prior year numbers, so we will revisit this once we've seen the 23-24 draft accounts. We will, as part of this, we have factored in the fact that we will be expecting the disclaimed prior year opinion, which is why you see a slightly lower threshold that we use for what we call the performance materiality, so that 14.6. We use a 65%, whereas sort of going forward, once we build up enough assurance, we would hope that we might be able to increase that slightly. The work around, probably just worth touching on this point now, but the work around the opening balances, as we have spoken about, there is still uncertainty in terms of what that will look like, but we as a firm are working with the various parties to understand what that would look like and sort of move forward with that once we've got that clarity over the guidance. What we are expecting to be able to do is to still get going with the in-year work for 23-24 over the summer period, and that will enable us to sort of help us keep moving and keep that momentum in terms of getting the audit back in track. But obviously opening balance work will have to be completed once we've got visibility of what that looks like. If I then just take you forward to talk through our sort of key risk areas, which start on page 6 of the document. So the first one we've drawn out here is around the valuation of land and buildings, including the sort of solar farm and your various other land and building entities. This is an area which probably is not unfamiliar in terms of a key audit area that we look at. There is an element of estimation, judgment, which is involved when you look at any sort of valuation, and also acknowledging the fact that that valuation is done on a sort of rolling cycle. So we will engage our valuation specialists, and we've already started those discussions to help us look at the valuation of those land and buildings. And then the second risk, quite similar, is around the investment property portfolio, and similar basis in terms of the estimation that's involved in the valuation of those properties. And again, we'll have a look at a sample of those properties to make sure we're comfortable with that valuation basis as reported in the accounts. The third risk is management override of control. Now, this is the risk that you see on absolutely every single audit. It's really that risk that acknowledges the fact that management could be, if they wanted to be in that position, to override any key controls. Key areas that we look at this is around journal controls, any key estimates and judgments where there is that greater level of judgment involved. The next significant risk area that we've just pulled out is around the valuation of the pensions liabilities. So again, similar to what we see on the property and side, there's a lot of estimation, a lot of judgment which is involved in how you value the pensions. So we will involve here our what we call the Pension Centre of Excellence. So they're our specialist pensions team. They will do the work around understanding the valuation there and understanding how that's been calculated within the accounts. The next couple of risks are ones that we call other audit risks. So they're not our significant audit risks. They're not the sort of key focus, but other areas which we consider to be of heightened focus for us. Now, risk 5 is around looking at the non-capital expenditure to say, should it have been recognised as revenue expenditure or capital, to really understanding how that's been accounted for in the accounts. Now,
We don't consider this to be a risk of fraud, so we have rebutted the expenditure risk over fraud at the moment for expenditure, but we have pulled this out as a potential error risk, so that there could be a chance that expenditure that should be classed as revenue has actually been categorised as capital spend instead. And that's really in the reflection of the fact that you've got a very large capital programme, so there could be some risk sat within there. Risk 6 is just around this land recoverability of the long-term debtor. So again, that's probably not unfamiliar, something that I know that EY have pulled out in the past. And again, we'll just understand where that is sitting, how we're comfortable that that is recoverable, and any work that we need to do in terms of looking at if there has been any impairment sitting on that balance. And then risk 7 is just around regulatory compliance, any litigations and claims. So we are aware of obviously the guided busway sort of incident that's been occurring, and the health and safety executive involvement there. So we will have a look at that and understand the process that's been going through, if there is any factors we do need to consider, any provisions, etc., that might need to be included within the accounts. And the last one is really more of a first year audit risk. So there's a number of PFIs that you've got. We need to just have a look. So they're based on often very complex models. It's the first time that we'll be looking at them. So we need to go in and understand actually how does that model work? How is it pulling through the information? Are all the inputs valid? And how does that feed in? So probably more of a 1-year issue, the PFI liabilities, but something that we'll have a look at as part of that sort of opening balance work as well. And then just on page 18 and 19, we set out the reasons why we are rebutting the presumed risks of revenue recognition, which is something that you see on nearly all audits, but we have the ability to rebut. And from a revenue perspective, it's really because the nature of the council's income is pretty standard in terms it's quite predictable, it's quite consistent, and therefore we consider there to be a relatively low level of risk for that to be fraudulently manipulated. And similarly from expenditure for public sectors under PN10, we are asked to consider actually the expenditure risk of fraud rather than just revenue. And at the moment, and say this is based on our very early initial assessment, is that we don't consider there to be a fraud risk linked to expenditure, but we have got that risk of a potential error there. And then if I just jump through to page 20 and 21, this just sets out what our approach is to value for money. So the value for money work has not progressed too far as of yet, so we haven't brought to you any sort of initial views. We wanted to see what EY's position was, and also get some further information from our perspective. So we will continue to work on that over the coming months, but I thought it was helpful for the committee to see what our proposed approach is, sort of the various aspects that we look at, key things that we will be considering. So external reports from regulators, we'll look at internal audit reports, we'll do various inquiries. One of the things that we plan to do is to have inquiries across the council, so talking with the various executive leads to understand how processes and arrangements work across the council, so not just focusing on the finance team. And then I think the rest of it is probably just the appendices. So obviously the audit timeline was based on what we were hoping for was a September backstop date. Obviously there may be some change to that sort of final sign off position, but we'll revisit that as we get some clarity. And I guess the other thing just to pull out is our confirmation of independence, which is set out on pages 26 and 27. So just to confirm to the committee that we are independent as your auditors. But happy to have any questions.
Excellent. Thank you very much, Emma. Comments, questions, Jeff, and then Chris. Go on, Jeff. No, well, I will, but in a moment.
I'm having a good old day today. Thank you, Chairman. This is almost as much for my own information as anything else. And you've given us a lot to think about here, obviously, and we can't discuss the whole paper. So I picked on one of the risks that you've identified, which is in my view, a very important risk. It's not just another risk, but it concerns litigation. And I don't know actually how many claims are in process in the council, but I mean, we all know of one major one, and there are probably quite a few others relating to potholes, and they're relatively minor, but they could be major. Basically, anything that we do as a council is subject to risk and potentially a claim from some dissatisfied resident or some injured resident. And I just wondered how auditors, I mean, we make a provision in the accounts or we identify a contingent liability. How does an auditor satisfy himself, herself, that that provision is reasonable? Because there will be reams of correspondence from lawyers claiming one thing or another. And at the end of the day, some of these things can only be settled in court. So what can you reasonably do or say that will satisfy your client that what is being done, and the public, of course, that what has been provided is reasonable? How do you go about it? How do you, where can you draw the line? Because otherwise you'll be dragged into the litigations itself.
That's a good question. So, so a couple of things. So firstly, I think it's important to remember that when we are looking at things such as provisions, there is obviously an element of materiality. So, so lots of low-level claims are not necessarily the key areas of focus. But what we do and what is important is around often the completeness of any litigations and claims and any provisions to say, actually, have you captured everything that you should do? So there's a couple of ways and things that we do. So we have various inquiries. So with Emma, so we have a regular catch up with Emma as the monitoring officer. We will also review your claims listing. So you'll have you will have a document which sets out these are all the claims litigations. We'll have a look through that to see whether we see anything that looks unusual. We also do tests around looking at any transactions through the year which are legal costs. So if there's any legal costs that we identify which we don't sort of recognise as something that we've been made aware of from those other inquiries, that would trigger us to say, well, actually, what is this? What's this linked to? Should there be something provided which maybe hasn't been? In terms of the actual looking at the provisions, so actually if you've made a provision, how is that reasonable? I mean, partly that is to understand what the basis is. So we ourselves will want to understand why you've made that provision. Is there any legal basis for it? What is the obligation? And actually, are there any ways at which that should be calculated? So certain provisions potentially in some legal instances might have quite a formulaic way that they are come to. So if there was any sort of central regulator that was saying, you're going to have this, we expect this fine. And then, the thing around the provisions is it has to be a reasonable estimate, and that's quite important. So we would take the view that to say, well, actually, has the council got relative, enough information to be able to make an assessment, yes or no? And then actually where they've landed, do we think that is materially reasonable? And again, it is coming back sometimes to that materiality point to say, actually, in the round, is it the right number?
Thank you. Chris.
Thank you. I've got quite a few questions, but if I just ask one to start off with, with your permission, Chair.
Yeah, I've got Mohammed as well.
Yes,
but
fine.
I mustn't
I'm
forget
happy.
him,
I'm happy
but-
to come back later.
Yeah, yeah.
I'm no great fan of the FRC and the way in which it regulates auditors, and in particular, as far as public interest entities are concerned, I find many of their statements to be inconsistent, and they go for small things, they ignore big things. I'm really not happy with the FRC. But I can't help but feel that there is an issue that the FRC will be concerned about as far as the sector is concerned, that is, the audit of local authorities, concerning the opening balance issue for the year. And it seems to me as though there is significant risk for any auditor to take into account as far as those opening balances are concerned, because they haven't been subject to independent scrutiny. And that's both on the revenue side and on the income side, which is why I was surprised about the relative assurance that you appeared to have concerning income, because the opening balance on the income side hadn't been independently addressed. And I just wonder, Chair, if this is an area where if there's going to have to be a very significant amount of work, and what is the basic approach that you're going to take other than performing what would have been the audit of the previous year so far as closing balances are concerned?
So you are right at the moment in the report it is light, and the reason that we are light on the position to be taken on opening balances is that we are awaiting guidance from the FRC, from NAO, in terms of the steer as to the work that needs to be done. However, what is quite clear from our initial discussions is that there is not the expectation that we would do a full opening balance audit, and the reason for that is when you look at the consultation, it talks very much about the recovery phase. So there is not an expectation, and I think it is quite clear that the committee has is cited on this, is that you will not have a clean audit opinion for 23-24 because the opening balance will still be modified, and that will be the case on any disclaimed audit because we will not be able to give full assurance, and it'll take a number of years to be able to rebuild that level of assurance to a fully clean audit. That's not to say that you wouldn't have a clean closing position because we will have audited that, but because you haven't had a fully audited opening position, it takes a number of years to rebuild that assurance. So the work that we are expecting to do over the opening balance at the moment, based on where our thinking is, will be quite risk based. So it will be risk focused in terms of where we think there might be greater risk, where we might be able to verify opening balances quite easily, and then taking the time to move that back up. So it will be a case that over sort of 3 years probably you get to a clean opinion, and that is that will be the case for all disclaimed opinions, and would be the case in any situation with a disclaimed opinion, that you would have a period of time where you build up that assurance again.
Chris.
May I have a supplementary to that? That wasn't the answer I was expecting, although it makes a great deal of sense. But am I to understand that you are already working on the assumption that because of this fundamental issue, and it is really quite fundamental about the start position of the accounts, that you are working on the assumption that there will be a disclaimer of opinion for 23-4, or would it be an except for opinion?
No, it will be modified. It won't be fully disclaimed. Yeah. So it would be a modified opinion. So it wouldn't be a disclaimed audit opinion.
Do you want to ask your other questions? And then I'll bring in Mohammed.
That's kind of you. Thank you. I was very interested in the little pictogram you have on page 5 of your report, where various risks are identified in terms of the likelihood of material misstatement and the potential impact on the financial statements. I thought that was very interesting and very informative, but there was one thing I really didn't understand, and that was the position of risk 4, which is the valuation of post-retirement benefit obligations. Now, it is shown as having the greatest likelihood of being a material misstatement, and I can fully understand why, because of all the estimates, let's give it a polite word, estimates which are used in reaching the relevant figures there. What astonishes me, though, is that in terms of the potential impact on the financial statements, the risk involved on risk 4, the post-retirement benefit obligations, is less than the risk for the valuation of investment properties and less than the risk on valuation of land and buildings. And given the amount of, I'm sorry, I don't like using this word estimation, given the amount of guesswork which is involved on the post-retirement benefit obligations, I'd have thought that the risk, especially given the size of those obligations as well, I'd have thought that the potential impact on the financial statements for number 4 would be greater, not merely than number 1 and number 2, but greater than the 2 of them combined. So I was really surprised to see number 4 is the potential risk for the valuation of post-retirement benefit obligations is comparatively so low on the potential impact on the financial statements. What have I misunderstood?
To be fair, it's a fair comment. I think I might just need to take that away, if that's all right, to have a look at it. Might just be our bubbles in the wrong place.
Whilst we're on that page, are there any risks which are missing that Emma should consider? I mean, I can't immediately think of any. I think these are the key ones, but it does make you think. Is there anything that we should be encouraging KPMG to look at? Seems not. Anyway,
I think
oh, go on.
there's some things that are not in the public domain at the moment, which we probably need to talk to them about, but yeah, we can talk about that offline, I think.
Okay, sounds mysterious, Emma. So we'll look forward to hearing more about that. Sorry, Chris, and then Alan.
So I was going on to another question, unless Alan was following up my
Alan,
question.
It was coming back on something Emma said in response to your question. You mentioned about a modified audit opinion. Presumably that is a modified rather than a quali, obviously assuming everything's okay with the audit rather than necessarily a qualified audit position. And then it's slightly going on to what Councillor Gay-Nick was saying earlier, is that makes the need to get something out at some stage even more, because obviously we've got modified audit opinions that those who look at the accounts, you know, there are quite a few people who look at the accounts in great detail, would need to be informed, shall we say, that because of the fact that we've got the disclaimer for 22-23, there are, and this is going to be for, I presume, for basically all councils anyway. So there is something, it might be a national thing that gets out there, but if you understand the question, I'm just trying to make sure that modified doesn't mean qualified if everything else is okay.
So the modification would be around the opening balance position. So what we would hope to be able to provide, however, bearing in mind the backstop dates will be a continuation. So we do need to obviously make sure that we complete the audit by that point. The modification is around we haven't got comfort over the opening balance position. So that's where the modification lies. What we should be able to do is to say modified with the, opening balances are modified, but in the closing position we're comfortable with. So that's where we're aiming to get to. So it would be that level of modification.
Back, sorry, and not wishing to write your audit statement for you now, but would that include a comment around the fact that because of the disclaimer of the 22-23 accounts, we are not able to assure ourselves that the opening balances are, to our satisfaction, correct?
So I can't tell you exactly the wording as of yet. There needs to be a lot of work done, but in essence, yes, it would be highlighting that.
Okay, I'm conscious that Mohammed hasn't said anything for a while. So Mohammed, would you like to put your questions?
I had
and
a
then
couple
we'll
of
come back to
questions. So the first one is just around the materiality and mainly the materiality set for adjustments being disclosed to the audit committee, the 1 million amount we currently have. I just wanted to understand if there was scope to share kind of values below that, not necessarily changing your audit testing in terms of assurance that you provide or the level is set out to uncover that, because I do understand that if we reduce that, it might be more work and potentially fee to kind of cover that risk. However, if you do uncover something that's 500k or 700k, could that not be shared as part of the kind of the reporting to the committee?
So the £1 million threshold is what we are required under the ISAs to report back to you. If there is an appetite to have greater visibility of adjustments below that, we can certainly have a look at that with Tom as to how we would present that back.
Perfect. Yeah, that'd be really helpful. A couple of the questions I had was, one, it mentions there's no reliance placed on IT systems or automated controls, and I appreciate it's kind of the first year, is to look at kind of learning the systems and everything else around it. Is that typical of council audits where you don't really place reliance on system or automated controls, or is it just because it's the first year and you're kind of learning your way around the systems?
So what we will do from an IT perspective is we are required under ISA 315 to do a detailed understanding of how all of the IT systems to operate and how they link into the preparation of the financial statement. So it's not to say that we don't do any work over IT. We absolutely do go and understand how they operate. The reason when we often rely on IT controls, automated controls, is if they are linked to any of the significant risks. And if we think about what those significant risks that we've identified to date are, the vast majority of those are actually manual in terms of the year end. So it would be the year-end valuation reports coming through, how that's actually processed would be a manual. It's not an automated type control. So therefore, there isn't a huge amount of need for us to rely on those automated controls as it stands. What we will continue to do is to continue to evaluate that. So as we make sure we fully understand those systems, if there are opportunities for us to do any work around IT, which could minimise other audit work, then absolutely we'll do that. I think probably first year, as you say, part of it is really just understanding how the council systems work. Particularly, I suppose, the key area where there might be some opportunities is around the journals type controls, but we'll have a look at that. And if that changes, we'll report that back to committee.
Perfect. No, that's really useful. Thank you. And my last question was on other audit risks. You've got non-capital expenditure in there, and it talks about, misclassification of revenue versus capex essentially. But I didn't see anything covered around more timing and release of capital expenditures, or when projects are completed. Are we timely in releasing what we capitalize it? Will that be covered as part of the testing?
I think potentially what this risk is looking at is saying where you've recognised capital expenditure. So actually where you have finalised a project, so you've moved all of that from WIP essentially into formalised capital. Is that correct? should it all be capital? So I think yes is the answer. We will probably pick it up under that aspect. And what this is doing is saying from all the capital that you've recognised, is that right to be capital? Actually, should some of it have gone through the I&E and have hit the revenue side? So that's the risk that we're looking at here. So yes, from a finalisation of projects, we would pick it up that route.
Okay, fine. The other reason I'm raising that because I have seen it quite often in other places where you have things in WIP which are completed which don't transfer across and therefore haven't been capitalised maybe for 6 months or even a year when they maybe should have been. So just wanted to check that was covered as part of that. Perfect. Thank you.
Thanks, Mohammed. Chris, you want to come back on the materiality point as well?
Not technically materiality, but it was my final question, which was Mohammed's first question. And that is, I've got no problem with the materiality issues which are listed in here. I fully understand the logic behind them all. And I also understand why we have only been promised here the information about corrected and uncorrected audit misstatements above £1 million. I think it was really helpful to members of this committee for us to see all of the corrected and uncorrected audit misstatements, even those which are below £1 million, not because it would make any difference to the accounts, because almost certainly it wouldn't. And if it did make a difference to the accounts, it would be covered by the other misstatements, which would have such a nature that they needed to be reported to us. But because it would tell us a great deal, I think, about the level of control which exists within the organisation, the level to which internal controls are working. I'm not expecting that there would be in an organisation like this dozens and dozens and dozens of uncorrected audit misstatements. I would expect that there would be relatively few. And if we were to have those ones under £1 million just in list form, without narrative, I don't want to put any extra work, but if simple information like that is provided to the management team, then I think it should be provided to the audit committee as well for us to satisfy our curiosity that there's nothing in there which is worth exploring further. And I can't specify what I'm looking for because I don't know.
Okay, hang on to that. Let's bring Michael in, then you can ask your last questions.
Absolutely, Chair. It's always been my approach and style that we will disclose all matters raised by the auditors, and we'll make statements where we disagree and we're not making adjustments, and ask the committee for comment on that. So absolutely full commitment to that.
Okay, thank you. And Stephen's nodding as well, so that's also reassuring. Now he's getting a bit concerned. And anyway, your last couple of questions.
That was my last question, Chair.
That was your last question. Okay, anything else for Emma? The only thought I'd got was going back to Chris's comment about the FRC. In one of your appendices, it talks about the FRC's areas of focus for companies. And we're not a company, we're a local authority. Is there any reason why you put in that particular one rather than something similar for local authorities? And should we be following this anyway because it's good practice?
So this is you're right. It is more company focused, but what we tend to see with the FRC is if something that they're focused on the companies often will feed through. So there are areas that we should all be mindful of and focusing on. Admittedly, some of them will be less relevant than others, but equally for some of the various, your subsidiaries, they'll also be, useful for guidance for. What if we do get anything more local audit focused as we work through? We'll obviously bring that as well.
Okay, Chris.
That, Chair, comes back to the point I made earlier about how unsatisfied I am with the FRC in dealing with PIEs. They grabbed hold of all the PIEs, the public interest entities. They grabbed hold of the control of audits or the supervision of audits for PIEs, and then they just bolted it on to their main company considerations. And then they seemed almost to ignore the special situations that many PIEs have got, not all of which are local authorities. There are a whole host of different public interest entities. But whilst they've grabbed control of that, I say grab control, that's might be unfortunate. Whilst they decided that such audit should fall within their remit, they haven't specialised at all in terms of giving guidance as to how those should be dealt with. And that's what I meant when I said I felt that the FRC was being inconsistent in the way in which it was dealing particularly with PIEs.
Yeah. Okay. All right. And Alison, you're content with what's being proposed for the pensions fund?
Yes.
That's what we want to hear. A nice succinct answer. Excellent. Thank you very much. So thank you, Emma. We have noted the draft audit plan and strategy for the year ending 31st of March 2024, received from the external auditor KPMG. The next item is the internal audit annual report 2023-24, and can I ask Mairead Claydon, Head of Internal Audit and Risk Management, to introduce the report? Thank you. Thank you, Tom.
Thank you, Chair. So under public sector internal audit standards, the head of internal audit is required to give an annual audit opinion and report that can inform the authority's annual governance statement, which is the next item on the agenda today. So the report you have in front of you represents my annual opinion on the system of internal control at Cambridgeshire for the 2023 to 24 financial year. It's based on the internal audit work that was completed in year, as well as other evidence and assurances about the organisation's arrangements for internal control and managing risk. This year, I've given a moderate assurance over the system of internal control, indicating that the audit work has identified there are some control weaknesses that present a medium risk to the control environment, and that the control environment has mainly operated as intended, although errors have been detected. That is equivalent to the level of assurance that was given at last year's annual internal audit report. So the opinion itself and the reasons for this opinion are set out in the report and summarised particularly in the statement at section 2 of the report. Overall, in 2023 to 24, moderate assurance was the most common assurance opinion given across individual audits. I would highlight that where we did give a limited assurance, 38% of those audits related to the assurance area of project management and change, and 23% to the assurance area of procurement contracts and commissioning. In both of those areas, as has been discussed, particularly with respect to procurement, we have seen a lot of development of the control environment in year. So in 2024 to 5, that will continue to be areas for focus of the internal audit plan. And hopefully we will start to see some improvements in the opinions over those areas. Pleased to report that we've seen an improvement in the implementation of audit actions due for implementation. So 75% of actions due to be implemented in 2023 to 24 were implemented in year. That compares to 62% at the end of the previous financial year. So that is very positive, and hopefully the increase we've seen in actions being completed at the end of the financial year is reflecting that our new approach to following up on action implementation is working. One thing that I should highlight, which the report is lacking, which we would normally expect to be able to include at this point in the year, is the outcomes of key financial systems audits. So we have issued the draft payroll audit with a double moderate opinion, which is again equivalent to the opinion that was given last year. We have not yet released a draft pensions audit report, as we've needed to do some further work to explore some issues in that area. North and West Northants have also not released their draft reviews of accounts payable and income processing as of today. We can, however, take some assurance from the detailed reviews of accounts payable, income processing and debt that were completed by the Cambridgeshire team last year, and the work that we have done throughout the year to follow up on the implementation of actions from the prior year audits, which means that my team have been working still with the accounts payable and income teams. So the report at Appendix 1 gives much more detail on the audits we've completed in year. There are also sections covering fraud and whistleblowing and risk management work, and the performance of the internal audit team and our quality assurance and improvement programme. It is quite detailed, so I won't take you through every area, but very happy to take any questions from the committee.
Okay. Well, a couple of comments from me. First, you referred to the key systems audits and the fact that we hadn't got all the audit opinions, particularly from West Northants, which is really frustrating. Do we need to set Michael on them or anybody else to try and get these audits completed? And secondly, there are still quite a few actions where your outstanding recommendations have a number of TBCs. Is this something that Stephen should be addressing for you to try and ensure that directors, who I'm delighted will be appearing in front of us, but will be providing fairly quickly to you?
Thanks, Chair. So in respect to the key systems audits, yes, in fairness, West Northants did make us aware that they were having resourcing difficulties earlier in the year, at which point the Cambridgeshire team has agreed to take on the debt recovery audit that they were originally scheduled to do. So that work is now underway with the Cambridgeshire team. And I have had updates from West Northants and North Northants, so I will hope that I can bring you a more positive update to the next meeting. And with respect to the actions where we still have some TBCs, yes, I think the system has definitely improved and we are getting updates in from action owners. Sometimes as well, there are issues where, you know, a member of staff has left and it can be difficult to track down who is now responsible for taking over an action, which can contribute to that.
I'm looking at Stephen here. You have the influence and power, Stephen, to encourage your executive directors to find an appropriate person to fill in the TBCs.
Chair, I would probably just defer to Michael as one of my executive directors to tell you whether or not he feels suitably encouraged, along with his colleagues.
It's regularly reviewed and we're regularly held to account, and there are no hiding places. So yes.
Come on, Jeff.
It's thank you, Chair. An extension of the same point, really, and that's the point that I was making before. I first of all congratulate Mary and her team for very comprehensive internal reports that I've read, at any rate, and it's very hard work, but very thorough, and which is great. It is a pity that you have to report that you've only got moderate assurances and overall, and therefore, you know, I'm sure this committee would look to see a better result in future. I just wondered how long, or whether we've ever had a good internal report at any time in recent history. Obviously, this opinion was given last year, and it doesn't seem to have moved on very much. But following the points you were making, of course, it's down to the individual departments to make the corrections that you recommend. But you know, it's a year on, and it's disappointing. I think that we don't have a better assessment. That's not your fault. That's the fault of the officers who have to run the particular departments under scrutiny. So I guess I'm making a plea that more attention, wherever it comes from, should be given to sorting it out.
I think Stephen is itching now.
Thank you, Chair. So, Councillor Seif, I think the point's important, and I agree that we would ideally want to achieve a better audit opinion from Mairead. Of course, Mairead's opinion is her independent statutory opinion based on the work which she and her team do, so we respect whatever opinion she produces at the end of the year. That said, I would certainly want to see us improve from the moderate position we have, but I think it's also important to contextualise the fact we've had two moderate opinions in a row on the basis that the council has gone through fundamental change, including all of the corporate leadership team either changing roles or being new to the organisation. For example, Michael is only 12 months into post as of the end of March this year. I think on that basis, whilst that's not intended to excuse, it's intended to clarify that the moderate assurance is probably also a recognition of the fundamental change this authority has been undertaking and is continuing to undertake. That said, as you've already heard, we have seen an improvement in the number of audit actions closed this year, quite significant improvement compared to the previous year. And clearly, I would hope that trend would improve. Ultimately, I would prefer a better audit opinion from Mairead, but importantly, she has to be the person to determine what that opinion is when she's undertaken the work. Thank you.
If I can just say, Mairead's opinion is very well respected. It's not her fault that she gives the opinion. It does. It's a professional opinion. I suppose my concern comes down to a basic thing: money. If as a result of that level of assurance we are losing either incurring additional costs or losing money, as I believe to be the case in one particular instance, we should be. Well, you are concerned. It's not a criticism of you. I do understand that there have been a lot of management changes during the course of the last year, but I just think it highlights the importance of getting it right and as quickly as we can. Thank you.
Thank you. And I think Stephen is absolutely right that the change from top to bottom in the organisation, in the way the people that imposed and the way in which we're doing things, is over time going to lead to improvements in the audit results. But I was reassured by the comments from Mark and EY's external audit, which I think demonstrates that we are on the right track and things are looking pretty good. But there, as I said in my introduction, that there are some bits outside of our control, the committee's control certainly, where things can continue to improve. Chris, you want to come in?
Yes, thank you very much. I just want to make sure I'm on the right. Annex B, yes. Annex B gives a summary of outstanding recommendations. And I think I first of all ought to join others in noting and thanking Mairead for her professionalism and independence. And that's really important for us as members of the Audit Committee, for us to feel confidence that there is both professionalism and independence shown in this, because if there weren't, then our job would just not be possible to do. So we are highly dependent upon Mairead, and I'm really grateful for what she does and how she does it. On Annex B, we first of all need to look at those high recommendations which are overdue for more than 12 months. On the Integrated Drugs and Alcohol Treatment System contract, we have received a really helpful note from Val Thomas. And despite the fact that we're now moving back to the 31st of July, nevertheless, clearly we're moving in the right direction for the right reason and already seeing the right results from that. The other one is the fire risk assessment, which is regarded as high and which is outstanding for some time, where we're told the revised target date is the 30th of May, 2024. Given that it is a high recommendation over 12 months, can we have confirmation that that target date has in fact been achieved? And therefore we have, once the integrated drugs and alcohol issue is sorted out with the accounting issue we had there, that there would then be no high recommendations due over 12 months. That's my first question for me.
You able to help? Well, Michael.
It's probably a dual answer anyway. So I can confirm yes, but clearly then there is an audit process in terms of signing off that recommendation. So that's where that will finally sit.
Then my second question, if I may, Chair, is and this I'm sorry to say it is directed towards you, Stephen, in your overall capacity. We still have 7 high recommendations which are overdue more than 3 months, and we also have 7 medium recommendations which are overdue for more than 12 months. Do you regard those as satisfactory numbers? And I know that every single one has to be looked at in isolation, but do you feel comfortable with that, or would you have a different target?
Chair, through you, thank you to Councillor Bowden for the question. I think there's a very simple answer to the question, which is no, I'm not comfortable. If officers have agreed dates by which audit action should have been completed, then my expectation in general terms is that the audit action should have been completed by the date first agreed. If those dates have slipped, there has to be very good reasons, and the executive director should really be the ones signing off the revised dates rather than that being individual service managers. So I can't give you a particular figure of comfort, but what I can say is I don't think slippage to that extent is acceptable.
Go on, Chris.
My final point on this is, am I correct in thinking that the Chief Executive, Chair, expects that as a result of the greater targeting of these issues, that the sheer number of items which are of high importance but overdue by more than 3 months and of medium importance but overdue by more than 12 months, the sheer number should reduce over time in a steady way?
I would like to say to Councillor Bowden, Chair, yes. A steady way feels like slightly slower than I might personally prefer, but I'll take that if that's the option. I will say, however, the Executive Directors are very clear when we receive our monthly updates from the Head of Internal Audit that the priority is high and essential, but I have increasingly been asking them to look at medium and lower rated actions, which have also been outstanding. So we have seen an improvement on essentials and highs. I would expect that to be continued as the particular risk priorities.
Okay, thank you very much. Any a little one, Jeff.
Little one. Sorry, I don't want to keep us all here longer than we need to be. It's just, again, partly an extension of the general issue as I see it, but insurance and the insurance strategy, that was lurking around a year ago. I accept that we've had a change of personnel, but I can't find it where it is on my list of actions. But are we satisfied that there is sufficient cover for all of those claims that are being made against us?
Okay, Michael's going to address that.
Yeah, so it's on page 130. I was presented with a draft strategy maybe about 6 months ago, which wasn't good enough. So didn't take that forward. We've since recruited a new head of insurance. He started 2, maybe 3 weeks ago, and he knows that this is one of the top priorities and is working on that. So I expect that as we progress forward, not the next committee, but the September committee, that I'm hoping we will progress that to near sign off at that point.
And Michael, when it says the strategy will then need to go to the lead authority board, is that an officer board or does that include members?
That's an officers board because we have a partnership across the Northamptonshires, Milton Keynes, so that will go to their officer board. It's not a member strategy. It's the operation of the insurance function.
Well, sorry.
Thank you, Chair. Ray, a question for yourself. You hold a lot on the customer feedback outcomes. You mentioned quite a bit about it, but are you asking the wrong questions because you're not getting much feedback?
Thank you. I think that's probably a fair challenge. In the 23 to 24 year, we did try to change the format of the survey so that it's a very quick survey. It takes about 2 minutes. And we have tried to go out with every single final audit report that's been issued to request feedback and explain that it is a 2-minute survey. And we've still had a very low rate of return, even with sort of following up with officers subsequently. So I think there is a question for my management team around actually, I think the feedback survey is helpful, and sometimes we do get some really thorough feedback from officers, but whether it might be helpful for us to look at some other avenues for feedback as well, perhaps sort of meeting with directors and in a more formal way to obtain feedback as well. It's certainly something we'll be looking at for 24-25.
We did discuss this once before, and you were going to raise it at a CLT meeting, weren't you? Or it's something that you could raise with Stephen and his group.
Yes, so we do send out a sort of end of year survey to CLT, but those figures would be captured in the responses that we got. So right at the end of the year, there is an additional seeking of feedback through that survey route. But I think we do need to have a look at how that operates and how we can maximize the amount of feedback that we receive.
Okay, because I agree with David, it's quite an important thing to be picking up feedback and seeing whether there are any common lessons that we can adopt. Okay, any other comments? Oh, sorry, Mohammed, thank you.
Yeah, it was just a question around if it was possible to get some MI on actions so you've had actions which have been closed, and then throughout the year you're raising further actions. Would it be possible to apply a lens where you're looking at kind of reopened actions, or something you've opened 6 months later but relates to something you closed within the last 12 months, just to get a sense of, are these new actions or do they relate to a root cause that was similar to something we closed prior, essentially, just to get a sense of how well unsustainable closures are, and we're not just running through actions going forward, if that makes sense.
So we would normally pick that up if it were to happen through re-auditing an area. It's generally the case that may occur when we're coming back sort of a couple of years later. In general, we have a reasonably robust process of checking that an action has been implemented. So we won't just receive an email saying we've done this and say, okay, we will believe you. You know, we will go in and try to look at that process taking place in practice, and we'll only sign it off as completed when we're happy that the risk has been addressed. So I don't think we've got a significant problem with sort of actions being tentatively implemented and then that not being embedded within the service. The rare occasions where we have found it, it's tended to be probably the result of significant organizational change, whereby processes have just completely changed. So certainly something we could look at, but it wouldn't be my perspective that that's a significant issue that we see.
Sure. I think it'll just be useful, it'll kind of back up the audit opinion you do give then, and maybe it links more to the core plan, which is a bit more repetitive in nature. But yeah, perfect.
Okay, thank you. A final comment, Chris.
Thank you. When I did originally read through this, I did have one area I didn't understand. It's one of the medium risks over 3 months, or it's coming up to 10 months now, the income processing of 22-23. And it concerned a discrepancy in the CCC ZAR 10 control account. What is the CCC ZAR 10 control account, and what is the order of magnitude of the discrepancy, please?
Chair will provide a written response.
Okay, unless Mairead, you know, do you?
I'm afraid we have a lot of Z control accounts. So we're happy to follow up with that in writing.
I think that is very sensible. All right, thank you very much. Thank you, Mairead, again for a very comprehensive report. As others have said, we're very impressed by the professionalism and the independence of the internal audit section, and delighted to receive this sort of annual statement. We made a few suggestions, comments, which hopefully you'll find helpful. So we've been asked to consider the internal audit report for 2023-24, and we've been made available, we've been made aware of the internal audit risk and internal head of internal audit and risk management's opinion on the state of the internal control framework within Cambridgeshire County Council. So we have. Thank you very much. Next item is the draft annual governance statement for 2023-24. And Mairead, would you like to introduce this report?
Thank you, Chair. So the Council is required to include an annual governance statement as part of its annual statement of accounts. The draft annual governance statement in front of you has been compiled with the input of a range of senior officers, including the corporate leadership team and the statutory officers group. And it's based on a review of the Council's governance framework, self-assurance statements provided by directors, and a self-assessment of the Council's governance and control environment against the principles set out in the Centre for Governance and Scrutiny's Governance, Risk and Resilience Framework. This draft version of the governance statement and the supporting action plan, which you'll also find at Annex A to this report, is presented to the Audit and Accounts Committee in order to ensure that the final statement is produced with the benefit of members' insight and input. It should reflect the committee's knowledge and their experience of the Council's governance and control. And we therefore are requesting that members of the committee consider whether this draft version of the governance statement is consistent with your perspective on internal control, as well as the definition of significant governance and control issues, which is set out in paragraph 3.3 of the cover report. If there are any suggested amendments following this committee meeting, they can then be actioned in advance of the governance statement's inclusion in the Council's accounts. And the final statement will be signed off by the Chief Executive, the Leader of the Council, and the Chair of the Audit and Accounts Committee. Thank you.
Thank you very much. Chris.
Thank you, Chair. I am sorry to note an additional item which has appeared on the AGS this year in heading 3. Second item, the delivery of Cambridgeshire's local productivity plan. And I'm sorry to see it because I think it's a waste of time. But nevertheless, it is there and it's a legal obligation. What I don't yet understand is how, if at all, is it planned that this comes to members? Is it planned that it will go to a particular committee? Is it going? I just wonder if some information can be given. Obviously, it's the first time we'll have done it. I hope it'll be the last, but I doubt it.
Stephen.
Thank you, Chair, and thank you to Councillor Bowden for the question. I wholly agree with his remarks. The forward plan for the Strategy, Resources and Performance Committee includes the County Council's local productivity plan coming forward. So the next meeting of that is, from memory, scheduled in 9th of July. So the productivity plan will be duly submitted to members at that committee for consideration and hopefully approval. Michael has been in correspondence with government about deadlines relating to local productivity plans during the course of this week, mindful that we may have hoped for these requirements not to continue, but I understand they very much are. Thank you.
Any comment on that?
I share the Chief Executive's unhappiness about the situation, about having to do this. I just hope it stops.
Any other comments? The couple of comments from me. The numbering confused me. Section 3 talks about conclusions and approval, and then it starts off with a whole load of new things in key governance developments in 2023-24. And I just wonder whether the conclusions which are in 3.4 are actually the conclusions and approval, and those other bits should be in a separate earlier section earlier. So that will be one thought. I share Chris's and Stephen's comments about the productivity plan. I think that is a bit odd, really. But there we go. And there's also a comment on page 160. Oh no, I've written somewhere. 161 about the action plan, which I thought was extremely helpful. But it talks about the implementation of the complaints action plan in adults, health and commissioning. But as Jeff has said, we get an awful lot of complaints in other parts of the business, not least people falling over potholes or having accidents in potholes. Does this mean that there is already a complaints action plan that deals with potholes and we haven't got to update it or do anything with it? And this is just a completely new thing.
Thank you, Chair. So the action plan won't cover every aspect of the council's operations. It's picking out key areas that the senior management team and members have identified as being significant areas that they want to highlight particular additional work the council is taking to strengthen its arrangements around governance and control. So there will absolutely be other complaints processes that take place within the council, but there is a particular action plan underway in the adults arena for adult social care complaints, and that has been highlighted as being one of our key actions for strengthening governance, which is why it's included in the AGS, but other areas may not be.
Okay, Stephen.
Chair, perhaps if it's helpful, and Emma may want to come in on this point as well, there is a broader set of changes required around the Council's corporate complaints procedure as a result of changes to the Local Government Social Care Ombudsman's guidance, which we are in the process of implementing, which is the broader range of complaints issues. The point about including the adult social care complaints policy is that there are slightly different statutory provisions relating to adult social care, and the policy that governs the management of those, in my opinion, has not been reviewed sufficiently recently. That's why I've added it in as a specific action to the annual governance statement action plan for the coming year. So that was at my specific request based on a couple of complaint reviews that I had undertaken. Thank you.
And I can fully understand that, but does that imply that the complaints process for dealing with people who have accidents due to potholes, for example, is satisfactory and you don't need a separate action for those, reviewing those?
Sorry, Chair, that was my reference to the changes from the Local Government Social Care Ombudsman guidance. So we are adjusting the overall corporate complaints procedure. Whether we include that as an action in the AGS action plan, it's something we can go away and review again further if committee would feel that that's important to include. I can say, however, that we do have an actual project plan in place for the delivery of those changes and the review of the broader corporate complaints procedure, but I'm very happy to include it as part of the action plan if helpful. Thank you.
Do others feel that it's something that is so topical in our post bags that it should be incorporated here? I'm not getting an awful lot of comments on either side. I think well, there's some nods on this side. Well, I think we'll take that as good to you at least have a look at it and see whether it's worth including. The other comment I got was on page 166, which talks about the committee system, which we have. Under the committee system, decisions made by cross-parties committees, meaning that a separate scrutiny function is no longer necessary. So it is certainly true that a separate scrutiny function is no longer necessary, but the cross-party committees should be doing scrutiny before they make the decisions. Is this wording adequate to cover that, do you think? Anybody? Sorry. Emma. Oh, sorry, Emma, you're waving.
Yes, I don't know if it would help, Chair. I mean, obviously the scrutiny role is encouraged within the committee system, and it's meant to be done by the committees themselves. We don't have separate scrutiny panels unless it's in relation to health scrutiny, where we have a specific role. The issue with with scrutiny is that we are trying to improve that element of the committee system. Many members will work in the cabinet system and be used to working with scrutiny, whereas I think we could be more robust around that within our committees. So as part of the induction programme next year and as part of the work that we do in terms of general governance, we will be encouraging members to attend the training and development that we offer for scrutiny questioning techniques, and actually looking at some of the processes that we have in place around health scrutiny, which have really come on in leaps and bounds over the last year or so, where we're doing much more of a focus on scoping areas, understanding what outcomes we're seeking from the scrutiny process, making sure that members have the right evidence in front of them to ask the right questions. So we have a small scrutiny resource at the moment. Good scrutiny does take time and effort, not just by officers, but by members as well. So it's trialling at the moment within that health scrutiny function, and hopefully we can bring the good practice from there into other committees as well.
Okay, thank you, David.
Within the action plan, we've got target dates. A lot of them are the 31st of March 2025. Should they not be sooner? Hasn't the horse already bolted? Aren't we working during this period?
Well, oh, sorry, go on, Michael.
Obviously, there's an annual review of the annual governance statement, and that will be reported at this point next year. But throughout the year, there'll be follow-up process on follow-up reviews through the channels such as reporting to CLT in terms of progress. So that's why the majority of those are pitched at that year-end date, because these are a number of reviews that will take place across the year and will be reported formally in that annual governance statement for next year.
Chris.
Thank you. In the report, I was pleased to see the head of internal audit's comment about managing risk. I always have concerns about the fact that very often, even when we're talking in general rather than to do with specific risks, instead of talking about managing risks, we talk about mitigating risk. And my concern about that is that I still wonder whether the organization as a whole has an appropriate attitude towards risk appetite and assessing risk appetite. And by the use of some of the language I see, and especially that word mitigation of risk, which appears so often, I fear that we still don't really have an understanding of what a risk appetite is and what it should be. Do we feel that we are in a position where the organization has within its corporate thinking understands what a risk appetite is, what an assessment of risk appetite is, and therefore it's not necessary to talk always about risk being something which needs to be mitigated?
What do you think, Stephen?
Thank you, Chair. It's a very good question. So my reaction is, I think some parts of the organisation are better placed to properly manage risk and have a better understanding of how to do that, not just mitigate risk. I do think it's an ongoing process to try and improve understanding awareness. Some of that's education, some of that's actually cultural, I think, Councillor Bowden. So I think without trying to duck the question, I would say it varies. Some parts of the organisation are better at it than others, and I think we need to continue to press for improved understanding and awareness in, I'll use organisation psyche as a way of describing what you've characterised. Thank you.
Okay, thank you. And my last question, Emma, is to you. Would you have expected to see everything that is in the annual governance statement? Is there anything that you think is missing or we should be writing somewhere different on the basis that this is going to come your way in time? Is this what you're expecting to receive?
From my initial read, no. And actually what was nice is that the points pulled out were what I was expecting. So that is helpful. What we will do is obviously a detailed review to make sure you have covered everything that you should do. But in terms of the key themes, no, it was sort of the key messages I was expecting.
Excellent. Thank you very much. All right. So on that basis, we have considered that the draft annual governance statement at Appendix A and the action plan at Annex A, and agreed that those are consistent with our perspective on internal control within the council and the definition of significant governance and control issues given in paragraph 3.3. Suggested amendments that we've made can be actioned in advance of the AGS's inclusion in the council's accounts. Okay, thank you very much. I'm conscious it's 4 minutes to 4 and Stephen is going to another meeting at 4 o'clock. So we need to rattle through these last couple of items fairly quickly, which we can do, Michael, can't we?
Thank you, Chair. Can I just also confirm the Chief Exec has just emailed all of CLT about the internal audit recommendations and follow-up? So yes, feeling well inspected. Training program, I welcome the fact the skills and capability and experience of this committee, and its recognises the need to continue training. There is a training program attached here, but for brevity, there were a number of issues that saw some of last year's proposed training plan deferred due to national issues. I don't think we've progressed as much on e-learning, but a number of sessions were held and were received well. I therefore proposed an extended training program, both in person or stroke hybrid, as well as e-learning attached at the appendices, to run over 24, 25 and 25, 26, which will include the new council following the elections next May. So I pause there just for questions, Chair, rather than prolonging.
Okay, any questions, comments? Are we broadly happy with this? I think it's fairly self-explanatory. There's quite a lot here for us to get to grips with, but I think it is appropriate that we should have some learning where we feel that there are gaps in our knowledge. Chris?
Michael quite correctly identifies elections coming up in 25, and that will undoubtedly mean a change in the composition of this committee. It could be a substantial change. In which case some of the fundamentals in terms of training may be very helpful to be in 25, 26 rather than 24, 25. And I just wonder if the role of statutory officers would be better in 25, 26 as being something which new members of this committee, who may be new members to the council in total, should be trained on.
Okay, good. Michael?
Yeah, I completely agree. That's why we decided to make that e-learning module. So something that can be just rolled forward in effect as that e-learning material will be available.
Okay, thank you very much. So apart from that, we're
Just the references made throughout the committee about the executive directors attending and providing an overview of their annual assurance statement and progress against the internal audit actions. That will, Stephen and Mairead will schedule those in for the next 12 months.
And will you also schedule in, Stephen, the executive directors coming to see us? Is that what you're, sorry, I wasn't fairly paying attention, but that's what you're going to do. The only other thing from me is we keep deferring and not putting on the agenda fact stroke hacked. Can we get a date for that? But particularly bearing in mind Chris's comment that a lot of us may well change by next May. We ought, in my opinion, to have considered where we are on fact and hacked before then.
I was just about to say, I'm afraid I'm not involved in the fact and hacked issue.
apologies for interrupting, but I must declare that I'm a trustee of fact.
This is true, but okay.
Chair, if you'll allow me to take that away as an action, I know that Tom Kelly and I have previously dealt with that matter. Michael may be more contemporary in his information than me, but I was going to say, let us look at that and come back to you.
I thought we had actually resolved this, but we'll take this away. Yeah.
Do we think we've resolved it? I'm sorry, I shouldn't be looking at Chris, but I thought that the council was still looking into it with the possibility of recovering some money, but has that come back to us or not come back to us?
Chair, that was my allow me to go away and clarify. My understanding was we had closed out all matters in relation to that, so that's why I wanted to double check it. But that was allow us to come back to you before the next meeting.
Thank you. Any other comments from anybody, Chris?
Just one, Chair. I didn't comment at the time, but I did note in the internal audit update on the debt management issue and the old debts that there had been some delay in getting all the finance, the accounting in place to get that sorted out, and it continues to get older. And I just wonder, as a result of that, if it might be appropriate for the debt management update report to come in the July meeting rather than the October meeting, given that the situation isn't improving in the way in which we had been led to believe or led to hope that it would. It may be a matter of some greater urgency now. And of course, the longer this goes on, the more difficult it is to actually get these old debts recovered, assuming that they are due at all.
Is that something we can do, Michael?
Chair, first of all, I think the meeting is September, and that's when we've scheduled to do that. I think the recommendations, without diving back into the report, are not impactful on the collection of debt. That work continues to progress, and we're working towards that September timetable to bring it back. So I'm not sure of the ability or of the advantage of bringing it to July against the recommendations that were flagged by audit.
Right.
Just to note that we'd be hoping to have at least a draft opinion on the debt recovery internal audit available for the July meeting. So perhaps we can bring that forward and then the update from the service in September.
Thank you. And I was expecting Jeff to remind me that the Section 106 report is coming in July as well. But is that what you've said? Pardon? So he said, no, but the general review, not the specific site, but the general review. Yes. Yeah. Yeah. No, but it's not currently on the agenda. That's the thing. Yeah, no, we talked about it earlier, but we didn't. It's not specifically on the agenda. Okay. Anyway, I think we're done. So, if no comments from anybody else, we have noted the agenda plan and made some very minor comments. Thank you very much. And that concludes today's meeting. The next one's on Tuesday, the 30th of July. A Tuesday, not a Friday afternoon or anything like that. Very good. Thank you very much.